How you guys doing? It's BullTradeFinder here. So I just wanted to go over a quick little lesson on options. I've been asked this a lot because I've recently been getting into them. So options are, it's obviously, it's almost the same as trading stocks. Okay, so options are, you could buy a call option. Now, a call is meaning you want the stock to, or you are betting for the stock to go up. Or you can buy a put, which means you are shorting or you want the stock to go down. Now, there are strike prices. These strike prices are the price of the stock that you think it'll get to either by call or price. So let's say, for instance, Tesla, because I'm on this one today. We are looking for a $350 strike price by tomorrow or by a certain date. Now there's certain dates, there's weeklies, there's monthlies. So that's how you buy it by expiration. So you have to buy a certain date, then you have to buy a certain strike price, which would, just for example, $350 call. So I'm wanting the stock to go up to $350 by July 14th, a weekly. So by next Friday. So even if the stock doesn't reach 350, but the stock price has increased since my buy, and yeah, since the stock price has increased since my buy, the price of the option will go up. So you can pretty much trade the option like a stock, except just for a lower price. Now, of course, options and trading stocks itself are risky, so you have to be careful in what you do, what you're choosing to either go long or go against the stock, and what price you're looking to actually buy. Okay, so let's go over this. So obviously you can limit or market price. You could set bids on the call or put and the strike price you want. Let's see, what else? So, let's see. One moment. So you really want to play, options on a strike price that have good volume and good interest. You don't want to play dead volume or non-interested options. So that's for sure. Otherwise, you're going to get stuck and you're just going to lose your money. You also don't want to play stocks that have relatively no volume. Otherwise, the stock won't move that much, and your options will also be worthless. And if you don't exercise your option, or if you don't sell your option before the expiration date, you will lose that money as well. So everything you put into an option can be lost. That is something to think about when you go into it. So you want to make sure you're going into a play that you know you're confident in as well. So, let's see. What am I doing? Okay, let me pull one. Okay, so key things to know about an option. Implied volatility. I'll put it up here so you guys can look as well. So it's the estimated volatility of a security's price. So implied volatility for options actually increases or decreases the value of the option. If there's more implied volatility, there's going to be more volume, and there's going to be more. It's going to be at a more of a premium. So the option will move faster. It will also be valued, larger or higher than others. Now let's go over. This is one that a lot of people. The time premium. Okay. So any premium that is in excess of the option's intrinsic value is referred to, I said that wrong, is referred to as time value. For example, assume a call option has a premium of $9. This means that the buyer pays and the seller receives $9 for each one share of stock, or 900. Well, you're buying, let's say you're buying the, let me just go over to the prices here. So let's say you're buying a option for $9. So every option, call or put, it doesn't matter, is 100 shares. So if you're buying one call, that means you're actually buying 900 shares that you can either exercise or trade. So let me reread this sentence here. Assume a call option has a premium of $9. This means that the buyer pays and the seller receives $9 for each share of stock, or the $900 because of one call or one put for the 100 share contract. So the time premium is just the value of the option at that time. And now we are going to do, okay, let me do this one, Theta. I mean, some of this stuff is even stuff that I'm learning. Just the real stuff that I need to learn is the Vega and the Rho. Something I don't know yet, and something I really want to look at. Okay, Theta. Yeah, these are all Greek words, by the way, which obviously most of you know. Okay, so Theta is a measure of the rate of decline in the value of an option due to the passage of time. So, for the given option I was talking about, the Tesla 350, the Theta is negative $3.65 per day. It can also be referred to as a time decay in the value of an option. If everything is held constant, the option loses value as time moves closer to the expiration date. So, when you're moving closer to the expiration date, the value of your option gets lower. So that's something to take into effect. You don't want to be holding an option forever, or usually even up to the last day. Delta options. This is another good one. So delta is one of the 4 major risk measures used by option traders. Delta measures the degree to which an option is exposed to shifts. So let's say if the stock goes up $1 and the delta is 25 cents, the average of every dollar that the stock itself goes up, the option should go up around 25 cents. So that's pretty much what delta is. So let's go over gamma. Oops. Okay, so the option gamma is a measure of the rate of change of its delta. So every day the gamma is what the delta adds on to. So let's say the delta is 50 cents and the gamma is 3 cents. So every day the delta moves up 3 cents. So instead of 50 cents yesterday, today it'll be 53 cents, and so on. Okay, so the options Vega is a measure of the impact of changes in the underlying volatility of the options price. Specifically, the Vega of an option expresses a change in the price of the option for every 1%. Okay, I'm going to look into this a little more, because this is something I even have to learn. The Vega and the Rho. Okay, so Vega changes when there are large price movements or increased volatility in the underlying asset, and falls as the option approaches its expiration date. Vega is one of the group of Greeks used in options analysis, and only is a lower order of Greek. Wait a second. Okay, so the Vega could be used, for an example, the Vega can be used to determine whether an option is cheap or expensive. If the Vega of an option is greater than the bid or ask spread, then the options are said to offer a competitive spread, and the opposite is true. For example, assume hypothetical stock ABC is trading at 50 per share in January, and a February 52.50 call option has a bid price of 150 and an ask price of 155. Assume that the vega of the option is 0.25 and the implied volatility is 30%. Therefore, the call options are often a competitive market. If the implied volatility increases to 31%, then the option's bid price and ask price should increase to 175 and 180. Okay, so what this is pretty much saying is every time the implied volatility goes up 1%, the the bidder ask should move up the vega price. So let's say vega is 5 cents and the bid is 5 cents and the ask is 10 cents, and the implied volatility is 50%, and it goes up 1%. The bid should be 10 cents and the ask should be 15 cents. So it goes up 5 every time. So let's check up row. So rho is the rate at which the price of a derivative changes relative to a change in the risk-free rate of interest. Rho measures the sensitivity of an option or options portfolio to a change in an interest rate. So let's go into this a little more, make sure we understand it. Okay, so rho is the rate at which the price of a derivative changes relative. Oh, I already said that. Okay, let's do an example. Makes it a little. Okay, let's go up. Okay, the exact formula for rho is complicated, but is calculated as the first derivative of the option's value with respect to the risk-free rate. Okay. Rho measures the expected change in an option's. Let's see. Okay, so rho I don't think I really understand rho, so I'm not gonna commentate on that. If you guys see this and if you have read it, you can find an understanding. But I don't think it really has that much power anyway, so that's not so bad. And okay, just want to let you know that open interest, what that means in options, just so you get a hang of it. So open interest is the total number of open or outstanding options and or future contracts that exist on a given day, delivered on a particular day. So if there's a lot of open interest, so let me go, I'll do an example. Can't bring it up on the screen, sadly, but I could do an example for you and I could talk it out. Okay. So if I want to buy a $350 Tesla option and the open interest is 1,071, so that means there's 171 given contracts on a day usually. And the volume for that today is 346 contracts were purchased or sold. So that's a little interesting. Yeah, so options are definitely a good way to make money. They're also everything in the stock market, they're also a way to lose money. So you have to make sure you understand, the charts. You can't just go blindly into an option because you could lose it all. But the same is with stocks. You have to understand the charts. You have to understand the news, if there is news. You have to understand the buyers and sellers of the option itself and the stock to see where the stock is going to go and to see where the option will then follow or either go the opposite, because If it's buying, then the puts would go down, and if it's selling, then the calls would go down and the puts would go up. So it's always the opposites of each other. So that's something to take into effect. If you're going to do options, I would suggest paper trading them first. You could do that on Thinkorswim, or I believe Thinkorswim is definitely one. I know that. And good brokers for this that I have used are E-Trade, and people have been talking about Tastyworks, which is mainly for options. So that's something to look into. I haven't looked into it myself, but it's something to definitely look into. And Thinkorswim is good for options. So just wanted to do a little quick video for you guys. Thanks for watching. Hope you learned a little bit. And I'll be sending more videos on options soon. Thanks, guys. Have a good day.